Brought to you by Tailored Wealth, helping business leaders live their version of a rich life.
Welcome to another edition of the Making Sense of Your Money podcast, where we cut through the financial noise and help business leaders to make smart, confident money decisions. Your Money podcast. I am your host, Dan Pascone. I'm the founder and CEO of Tailored Wealth. And each of our episodes brings a trusted voice in the financial world, someone that brings their expertise to help high achievers confidently make sense of their money. And today I'm really excited about our guest. We've got a really unique conversation for you. I've got with me Erich Wolters, who is the founder of Timely Souls and also the chief watch guy, if you will. So Erich's got a really, really interesting story and specializes in not only collecting, but also investing in timepieces. So I'm really excited about this. Erich, thanks for joining the Making Sense of Your Money podcast, and we're pumped to have you today.
Yeah, thanks so much, Dan. I appreciate the invite and look forward to hopefully sharing some insights and education with your audience.
Yeah, we're definitely going to do that. We've got a lot to cover. I know there's a lot our audience will want to hear from you. But do me a favor, just give us a quick 90-second overview of what you do at Timely Souls. I think it's a pretty unique value and a unique offering. And then tell us a little bit about how you got into the space.
Yeah, absolutely. So at Timely Souls, what I do is I empower my customers to buy status and to buy style, but I also advise them on how to use timepieces for asset security, wealth transfer, and tax efficiency. And there's a lot that I can go into there over the course of the podcast here that I will, because I think it'll be really, really interesting to your audience. But generally what got me into luxury timepieces and then I think expanding beyond the traditional use really kind of started with my interest in general of collecting alternative assets. So I've been a heavy alternative asset guy for most of my professional career. I'm in corporate sales, and most of my early days commission checks, I plowed into like rookie cards, for some of the up and coming Major League Baseball players. And then my taste started to evolve into more vintage, pre-war collectibles from Hall of Famers. It's gotten into like crazy photography, crazy vintage tobacco cards. And then it continued to evolve into cars. So I'm an exotic car owner and looking at exotic cars, not just as like kind of something cool to drive, but as something that can give me a unique experience and a ticket into circles and networks that I wouldn't otherwise have access to. And the exotic car space is what got me exposed into the luxury watch space, because most of the guys that are driving these exotic cars are also really into watches, because the watches themselves are precision instruments with movements inside them that look just like the engine bay of a Lamborghini or a Ferrari. And so you have kind of a similar type of taste there for the engineering and the beauty of the design of these watches that you also see in exotic cars. And so that's generally what brought me into kind of the world of luxury timepieces. And it's actually become a complete fascination for me. And I've started an entire business around it where I'm advising my customers in some of the ways I described earlier, called Timely Souls. And just real briefly, the name of that company actually comes from another thing that I collect, which is sneakers. So I'm a huge sneakerhead, and I still will match my watch with my shoes. I was like, I'll call my company Timely Souls. I don't like resell sneakers. I just collect the sneakers. And but that's kind of another fun passion of mine is shoes.
So cool. I love the name of the company, and I try to be a pretty astute matching guy as well, but I don't think I've gotten down to the watch with the sneakers yet. So you're going to have to give me some advice on that. All right. You said a lot there that I want to unpack. And it's funny. We recently had another individual who runs a company that's based in the collectible space, a company called Rally, where they essentially securitize assets like this. So we had an interesting conversation about what we called alternatives to the alternatives, right? Because we talk to our clients a lot about alternative investing. And a lot of times that looks like real estate or private companies versus public companies. But you're really investing in and helping people to invest in the alternatives to the alternatives, which is really, really cool and unique in the sense that I know, and you're going to help to us to understand the unique wealth building opportunity that's there. But it's also pretty cool, and it sounds like you've totally dove into this, that you get to invest in and make money off something that you're really passionate about, which I think is an awesome concept, regardless of what that passion is. So let's take a look at let's focus on the watches for right now, because that's your true expertise. Yeah. Although, maybe we'll expand it a little bit beyond that as we go on. Tell us a little bit about what you help your clients to do, and maybe what the whole process looks like.
Yeah, absolutely. So let me just kind of first start off with just kind of positioning what luxury watches actually are when we think about them as an asset, right? So the Boston Consulting Group, probably about 3 years ago, published a really comprehensive report that just declared that the time for luxury watches and viewing them as investments has arrived definitively. Okay. And their analysis was about a 15-year view into luxury watches, and in particular, a basket of luxury watches in models from Patek Philippe, Audemars Piguet, and Rolex. And there's a basket of models within these three brands, very similar to what the Dow Jones is, what the S&P 500 is, in that these are the models that really drive the luxury watch market. And what they did was they took a look at these specific models, so models like the Nautilus or the Aquanaut from Patek, the Daytona from Rolex, the Royal Oak from Audemars Piguet. And they went back and historically looked at all right, what's the value of these models over a 10 to 15 year period, and how have they performed more recently throughout the COVID and post-COVID period? Mm-hmm. And the conclusion from Boston Consulting Group, right, this is a very reputable management consulting firm, right, was that luxury watches outperformed the S&P by 3x.
Crazy.
And that was a very profound finding for them, and was why the thesis of their entire report was these are legitimate assets, and we need to start looking at them differently. I believe that in 10 years, we are going to see watches as balances to risk and portfolios that Wall Street is very seriously building into their customers' investment. Really where we're trending here, watches are already mainstream as consumer luxuries. And generally, the areas that I help my customers and advise my customers around with luxury watches is number one, to make smart money decisions when it comes to luxury watches. So 99% of watches in the luxury watch space, so we're talking about models from Breitling, Omega, IWC, Hublot, Tag Heuer, to some extent. And then you're also looking at a lot of the models from Patek and Rolex and Audemars Piguet. 99% of these depreciate the minute that they're purchased at the boutique and you walk out of that boutique. And so what I mean by that is that if you were to, for example, you bought a Breitling Navitimer, which is about a $10,000 watch, very popular. It's the most popular line. It's a great, great watch. You buy it for $10,000, maybe you buy it for $11,000 because you had to pay taxes on it, right? If you took that watch and you didn't even wear it and you sold it on the secondary market the day after you bought it, you would only collect reliably maybe $6,000, maybe $5,000 for it. And what's really interesting is that if you went and sold that same watch 5 years later, you would collect $6,000 or $5,000 for it, right? So watches depreciate immediately, and they hold or plateau at that depreciation curve into perpetuity, just depending on the condition of the watch, right? If the watch is really beat up, then it will lose value. But if you're taking care of the watch, it will maintain its value. So where I advise my clients first and foremost is to make smart money decisions, which is never buy a brand new luxury watch. This is the only exception is about 8% of the Rolex portfolio, a small percentage of the Patek, and a small percentage of the Audemars Piguet portfolio. And what's interesting is that let's look at, for example, the Rolex Daytona, which is a very popular watch. If you bought that at the Rolex boutique tomorrow and you sold it the next day, on the secondary market, you would turn your $16,000 purchase at the Rolex boutique into $32,000. So the watches.
Why, Eric? Why does that one have that sort of growth versus everything else that you mentioned earlier that depreciates immediately?
Yeah, absolutely. So Rolex intentionally limits the supply of those watches in the market. And there's a very significant demand and interest in those watches as well, right? The Rolex Daytona is iconic. Everybody wants one, but very rarely can you actually buy one at the boutique. So Rolex creates this type of market hype intentionally based off of their own supply chain constraints, as well as they're continuing to increase MSRP pricing across these watches. So that's also elevating the secondary pricing. We're seeing tariffs. Just recently, we saw that the Trump administration announced, I think, a 32% tariff on all Swiss goods. Like that's a direct attack at the luxury watch market. Right now, you're seeing imports at about a 10 to 11% customs fee based on the new tariffs. But that could triple if Switzerland doesn't figure something out with the Trump administration in the next couple of weeks. That's going to really raise prices everywhere. And what you're going to see is that the Swiss manufacturers are really going to significantly limit the product they're sending to the U.S. So, and the U.S. is the largest luxury market there next to China. And you're going to have like this demand for luxury goods and people aren't going to be able to access them. So the pricing is just going to continue to skyrocket. So that's kind of what's happening within that space. But I'd say, most of my customers are buying what I call these value-based watches, which are the ones that depreciate immediately. And so, like, for example, there's another guy that I work with from LinkedIn who messaged me, and he wanted a Hublot Big Bang. And so we kind of decided which one he wanted. And he asked me the question, he's like, is this a smart money decision? I said, yeah, absolutely, because the MSRP on this watch is $22,000. And you are going to be buying it for $12,500. Right. And the watch is in excellent condition. I personally warranty the watch, and it comes complete with the box and the papers, right? So you basically have a great money store on your wrist that you can brag about and be like, yes, some other guy took a $10,000 depreciation hit on this thing, and I bought it at $12,500. And by the way, if I want to go sell this in a few weeks, I'll make about $12,500. If I wait 5 years, I'll make maybe a little bit more because of inflation, right? So you can basically buy these watches as a reliable store of value and a smart way to park your money.
All right. A lot of good stuff in there. So it sounds like you're not only a lot of times supplying the watches or selling them, but you're also advising the client on which watches maybe fits them from a style and an interest perspective, as well as from an investment perspective. Specifically on the investment piece, because style, everybody looks at differently, everybody's unique and different. But specifically on the investment piece, what do you look for if you're advising a client on, let's just say I came to you and I said, Eric, I want to buy a new watch every year, and I'm going to wear it for a year, and then I'm going to sell it. How would you advise me to go about thinking about what would be the best investment for me if I'm going to own it for a short enough period of time, but I'm not looking to turn around and sell it the next day?
Yeah, absolutely. I think generally the answer to that question will depend on how exactly you plan to wear the watch, right? Because there are different watch brands and models out there that suit different interests and activities. So for example, you have from most of the major watch manufacturers dive watches, right? So if you're into diving and if you're into water sports, then you might want to consider spending and parking your money into a diver watch, right? So some of the most popular diver watches are the Rolex Submariner, the Rolex Sea Dweller, Rolex James Cameron. You've also got the Omega Seamaster as another very popular dive watch. You also have aviation watches like the Breitling Navitimer that we talked about. I work with a lot of guys that are into aviation and they're pilots. That's also another industry that loves watches. Yeah. And you just may be interested in flight in general, right? And you may want an aviation watch. You also have watches that are built for speed, right? So you've got the Omega Speedmaster. You've got the Rolex Daytona as examples of models that you can buy if you are a car guy.
What does it mean that it's built for speed? The name always sounds cool. I get it from a marketing perspective, but what does it actually mean that it's built for speed or that it's built for diving or that it's built for aviation? Tell us a look under the hood, so to speak.
Yeah, absolutely. So for example, like the most of the watches that are built for racing, you have what's called a tachymeter on the watch itself. And that actually is a way that you can tell your speed through using the chronograph function on the watch and measuring over the an interval of like hundreds of yards. So like if you have 100-yard markers and you hit your chronograph and as that sweeps, when you cross a 100-yard marker, it will convert and tell you how fast you're going. And so it's basically an analog way to understand your speed. That's pretty interesting. Across the diver watches, you have the ability to, like, for example, the Omega Seamaster, you have a helium escape valve. So, like, as you're diving, you aren't putting your watch at risk where it's going to crack as you're moving through different like pressure zones as you're ascending up from your dive. You have like the Rolex James Cameron, which has I think at least like a 20,000-foot dive capability. I mean, it signified his dive into the Mariana Trench, and like Rolex designed that watch for him. So like if you're if you're like a super crazy diver, like or most of the guys that buy those watches like would never dive more than 12 feet, which is the depth of their pool in their backyard. But they just like to have that like symbolism of adventure that the Rolex James Cameron brings based off of like he wore that same watch on that very famous dive, right? Yeah, and so it's generally like features like that are pretty cool. So yeah, that's where we would kind of start. And then the same type of money story would come into factor, right? So like all of these watches depreciate. 99% of them do. We would look at the secondary market and we'd make sure that you're buying these watches at discounts to MSRP that's at least 40 to 50%, so that you've got a reliable asset that you're simply parking money into on your wrist. And in many cases, these watches are not only like assets, but so many of my customers, including myself, use their watch as a business networking tool to break the ice. Like if you meet other watch guys and you don't even know that it's like another watch guy, like talk about an instant connection, right? And like beautiful luxury watches are also just drive a lot of curiosity, right? So you just start conversations with folks in business networking environments using your luxury watch. And then finally, there's also a major trend within the industry around luxury watches as wearable art. So more brands are exposing the mechanics of their watches through skeleton dials or clear case backs. They're experimenting with more jewels on their dials and funky and exciting colors that allows the watch to be an expression of the personality for its wearer.
Right. Yeah, that makes a lot of sense. I think if you're truly a watch guy, you kind of know that and you've experienced that. So let's talk about this as an asset class for a second. You started off with a really nice point around how the watch asset class has sort of outperformed the Dow Jones. What do you see generally speaking? I get that each model is going to have its own unique experiences, and depending upon the way that the company either prices it or brands it or markets it, et cetera, it may go up and down as far as it coming into popularity and going out. What impacts the watch market generally speaking? What sort of impacts like the growth curve of the general watch market, or the luxury watch market, I should say?
Yeah, absolutely. Great question. So what you are seeing very recently in the world economic markets is a lot of volatility and a lot of uncertainty,
Sure are.
right? And what you're seeing at the same time is an increase in the price of spot gold prices because gold is a safety asset, right?
Right. It's a natural hedge, right?
Right. And so, like, you're seeing gold hit record numbers. What you're also seeing at the same time is watches with precious metals like platinum, like gold. You are seeing them literally follow the price trajectory of the price of spot gold markets. So there is a complete like reinforcing relationship between the price of gold and viewing gold as a store of safety, and viewing these luxury watches as a store of safety as well, that also carry those same precious metals. So you're seeing luxury watch prices, certain luxury watch prices, really elevate and follow the gold market, as they are also being places where people are pulling money out of markets and they are moving and storing that money into the highest end luxury watches from Patek, from Audemars Piguet, from Rolex primarily, literally as a store of value and safety and to mitigate the volatility of the economic markets. And this is something that is very clear when you look at the data and how in the price ascension of these models and how it's following the price of gold. Now, the other factors that you're seeing impacting pricing right now, we hit on this a little bit, is just generally like all of the trends that are happening across the globe, which is like nationalized production. You're seeing tariffs emphasize like kind of America first or Europe first, right? And so you're seeing the cost of transporting these goods go up significantly. You're also seeing in Porsche has done 2 price increases on their models this year. Luxury watches have already done 1 price increase on all their models this year. I'm calling that luxury manufacturers for watches are going to be doing another price increase next month. And so you're gonna see prices continue to elevate because the secondary market will respond and react according to what the elevated MSRP and retail pricing of these watches are. So you're seeing just so many forces here that like they're viewed as safety assets from the highest end, like high net worth individuals, and you're seeing these market forces driven by the manufacturers themselves that is elevating the price in the current economy too.
Very cool. Very cool. Great breakdown there. Super interesting. All right. So let's talk about it through like a potential customer of yours. I want to just kind of play this scenario out for you and where I think, a large portion of our audience may be. High earner, high achiever. Maybe I've got a luxury watch already. All right. I've got a Rolex or I've got a Breitling and I love it. And I enjoy watches, but I've never really viewed them as an investment. It's just been, something that I enjoy wearing, right? Now I want to make this shift and I want to start to actually view this as an investment and as a real asset class within my portfolio. I've got a broader diversified portfolio, all right? And I've got some excess cash that I want to put to play. And, I like everything that you just said from an investment perspective. And I also like the fact that I get to invest in something cool that I'm passionate about. I don't know a whole lot about buying and selling watches. I just know what looks cool and the names that you've mentioned. I have a decent understanding for it, but not nearly as much knowledge as you do. Where would I start? Like, give us like a walk through somebody that's not a diehard watch enthusiast, maybe likes them and wants to view them as a potential investment for them in the future.
Sure. So we want to start with intention. And there are generally 3 intentions that I see across my customers when they're seriously thinking about viewing their luxury watches more than a luxury watch. Because I will tell you that ultra high net worth individuals are using watches in very sophisticated ways that I assure you most people are not aware of.
Right.
And the first is like asset security, like we've talked about already, right? Like they're smart enough to understand taking money out of volatile markets and putting that money and parking it into the right models from Patek or Audemars Piguet or Rolex allows them to preserve their money in a more reliable and safe way. The second intention that I'm seeing from clients is using luxury watches for tax efficiency.
Let's talk about that. That's big for us. So let's talk about that.
Yeah. So this is a very popular technique among crypto enthusiasts and among business owners. And what I see consistently in the market from folks in that class is, let's say, for example, you bought Bitcoin 18 months ago at about $50,000, right? We all know it's north of 100 today. I think maybe 110 or 120 or something like that.
Yeah, about that.
So you're sitting on like 60 to 70% of like unrealized gains that if you cash out, you've got a very significant tax on. What sophisticated crypto traders are doing is they are purchasing a luxury watch with their cryptocurrency. And let's say, for example, that they're eyeing a Rolex Daytona John Mayer, which is about $70,000, right? And they move the equivalent of $70,000 of Bitcoin into that watch. Now, watches you don't have to register a watch. There's no title for a watch, right? But you can spend a lot of money on a watch. And you can take that $70,000, which leaves you with your original base of the 50K of the Bitcoin, and you move and you simply transfer that wealth from the Bitcoin into the John Mayer, and you now have $70,000 sitting on your wrist, and that $70,000 has disappeared. And let's say three months later, 3 years later, you decide to sell that John Mayer, and let's say that it appreciates to $75,000 or $80,000. Your tax exposure has moved from $70,000 to maybe $5,000 to $10,000 based on the appreciation of that John Mayer watch, right? So this is happening a lot, and it's a very sophisticated tax efficiency tool. I see this from business owners as well, that at the end of their fiscal year, in order to minimize their tax exposure, they will buy luxury watches and they'll add them to the books of their business.
Right. Yeah.
And so they're lowering their tax burden, and they've got watches, and they're really cool watches, and they can wear them, and they don't, and they don't tax, right? Like that stuff's happening all the time.
It's a great play.
And so then the third thing that you see is like borderless wealth. Let's say, for example, that you're an international business person and you have assets across different countries. And let's say, for example, that you're taking payment in Hong Kong for some type of project. And let's say that you want to move that money to Argentina or the United States. You take the money that you earned in Hong Kong on whatever project, you go down to the Hong Kong luxury watch district, you buy 2 or 3 watches worth $300,000 or $400,000. You simply put those watches on your wrist, you put them on the wrists of your friends, you guys hop on an airplane, you go to Argentina or the United States or whatever, you're wearing a watch. You're wearing a watch. You just moved $300,000 or $400,000 across borders covertly.
Right.
And that's happening all the time. So there's like, and again, this is what ultra high net worth individuals are doing today. It's how they're viewing luxury watches in a completely different way than 99.9% of like the population on Earth. But they're doing it, and they're doing it in a very sophisticated way, and it's allowing them to minimize their tax exposure. Because like what we all know is that like ultra high net worth individuals are way over tax exposed, like way over tax exposed. So they're always looking for ways to minimize that, and they're using luxury watches to do that.
Yeah, it's a really, really cool concept. We've talked to a number of clients about other assets, watches and other assets where you can limit your tax exposure. Is it safe to say if you're going to use it for a tax play that using the 3 core brands that you mentioned earlier make the most sense because of the fact that they have the most efficiency to keep their value?
Not necessarily. It depends. It depends like how much money we're talking about here, because those 3 brands that I talked about are typically the highest valued watches. Like, so if we're talking about protecting like hundreds of thousands of dollars, you'll want to look at those. But if you're looking at maybe like a different sum of money, you can just simply buy, again, the watch on the secondary market with after it's already depreciated, and that becomes a reliable store of wealth for you. So like you can make the value play, or you could make like the market play, just depending on kind of what direction you want to go. But you can play that strategy with either end of the market.
Very cool. Very cool. This has been super, super interesting. Thanks for all your thoughts on that. We're going to shift gears now for a second, Eric. We're going to get to know you a little bit more. All right. So you're officially entering the lightning round. So we never tell our guests about this. We just want organic first thought that comes to your mind. Could be a 1-word answer, could be a long drawn out thought. You ready?
Go.
Coffee or tea?
Coffee.
1 meal for the rest of your life. What is it?
Hello guys, 58th and 6th, New York City.
Okay. Yeah, I know that spot. I'm going to throw this one in there specifically for you. 1 watch for the rest of your life. What is it?
That's like asking me who my favorite daughter is.
Yeah, I get that. All right. So you've got 2 daughters, right?
Yeah.
All right. So I'll let you pick 2.
All right, got it. I think I would go with a Ulysse Nardin. I would go with the Maximarine, because that is just an amazing like networking watch and connoisseur profile watch. And then just because you have to have a Rolex, I would go with like the Rolex Zombie, which is like 18 karat gold Jubilee bracelet with black dial Submariner. I think it's just a beautiful.
Very cool. Very cool. What's 1 tool or piece of technology other than your computer or your phone? So it could be hardware or software that you can't live without.
Nothing comes to mind.
Okay, got it. Do you have a favorite quote or phrase or thought about money or success?
Yes. Sales is the transfer of enthusiasm.
Oh, I love that. Very good. Do you have either it could be finance related or it could just be personal related? Do you have a personal hack that you can share with our audience?
Yeah, let your wife manage the finances.
That's a good one. I'll attest to that one as well, personally and professionally. One bucket list item that you've already accomplished.
Australia.
Very cool. Very cool. One financial milestone that you're working towards.
$1 million of watch trading profitability.
Love it. Good luck on that journey, brother. And then if you could give one piece of advice to your younger self, what would it be?
You have the right idea. Don't give up.
I love it. I love it. All right. And then lastly, Erich, this has been great. If our audience wants to connect with you, wants to learn a little bit more about what you do at Timely Souls, you've shared a lot of wisdom with us today. They want to dive into that a little bit further. Where can we find you?
Yeah, best place to check me out is my website. So Timely Souls, so TIMELY.com, like Souls of Sneakers, right? Because we talked about my passion for sneakers, and then obviously Timely for the watches. So TimelySouls.com. You can check out my inventory. You can also check out all of my industry thought leadership there as well. Like I post thought leadership every week. So a lot of the stuff that I talked about today, I have literally published articles on it over the past, year plus, right? So you can always follow me there.
Very, very cool. I'm looking forward to checking that out. I'm sure our audience is as well. Thanks for sharing your time and your insights with us. That's all for the episode. You can find the podcast along with our newsletter and our YouTube channel, all for free at makingsenseofyourmoney.com. And as always, prioritize your version of a rich life. Cheers. Dude, awesome. That was great, man.